Bitcoin is trading at $63,600. So let me dive into the charts and let me share with you what I'm seeing and the key levels to watch, which is going to determine whether this market is going to continue to pump or whether it's a fake out and it's going to dump. Let's dive into the charts. So we're here September 24th. We have 7 days left of this month, and that is going to be so important because we need this monthly close to close in a bullish way. In fact, actually, let me start out here with the monthly chart right now so you can see what I mean. Right now, if we close the month of September at $63,600, that is an incredibly bullish candle because you can see it just made all these wicks. We had 7 months of correction and chop, and I would expect if we close at 63,000 or higher for Q4, the next 3 months, to be incredibly bullish and for us to continue to rocket through all-time highs. But there are still 7 days left, and if somehow something happens and this drops back down and we close in the red, so if we close below the monthly open, so below say 58,500, then it can actually still be questionable. So fingers crossed, guys, that we do actually close above 63,000 for this month, because then I think we see this continuation. So let me drop it back down to the weekly. And I've already talked about this before in my previous update and many other times actually, but I just want to re-emphasize it because this is what I think is happening right now, and it's the clearest way to actually see what is happening in the crypto space. So this was the 2020 and 2021 bull market cycle, and this is the current bull market cycle. And you can actually see how similar this really is at this point in time. I can even show you here, if I take the bars pattern and we take pretty much this entire run up, look how similar it is to what's happening right now, right? So from this point over here, so from about August of last year, we had almost an identical run up here where we went from 26,000 to 74,000, and we had this pullback here to the 50-week moving average in almost exactly the same way. So in 2021, you can see this peaked in April, right over here. It peaked in April, and this year we peaked in March. It's almost identical after the same massive run up, a peak, and then a big drop all the way back down to the 50-week moving average in the exact same way as we had it. March, we peaked, and the drop wasn't as extreme as it was in 2021, but it still took 7 months here, grinded back down, and did exactly the same. It dropped to the 50-week moving average, bounced, retested a second time, and now bounced. So if this continues to play out in this way, we can expect this bullish continuation, and I would say we can expect $85,000 to $95,000 potentially by the end of the year. Okay, that would be the bullish scenario. The invalidation of this, where things start to look bad, is very simple. It's if we lose this 50-week moving average, which currently is about $55,000. So if we get a weekly close below there, then things start to look bad. Until then, though, we are sitting here waiting for a breakout, and there is 1 week left until the end of the month. As long as we can hold here 63,000, 62,000 and close that for the month, I do think we see this continuation, and then the party gets really fun because we're going to see Bitcoin pump to new all-time highs probably pretty quickly in a matter of weeks, and then we're probably going to see altcoins also do a multiple X. Now, the whole question, what is different this time and what is playing out, is of course the rate cuts that we have had last week, where the Federal Reserve in the US has cut interest rates by 0.5%. And historically, this is actually a bearish thing for the markets. Let me head over into the charts. So what I have here is the S&P 500. It's the US stock market index, one of the biggest ones, going back all the way to 1998. This is a weekly chart, and you can see the vertical previous lines with the red arrows. That is the previous times since the year 2000 when the Fed made the first rate cut after a long hike cycle. Okay, so the interest rates were going up, and that first time when they cut, that is the vertical line on this chart. And it's pretty clear on this chart what happened. We had the 2001 crash over here that followed the first rate cut. We had the 2008 crash that followed this rate cut. in March 2020, even though that was kind of a black swan event where they literally locked down the whole world and it was etc., etc., what also was interesting is that it was actually preceded by an initial rate cut a few months before. Market pumped a little bit more, and then we had that massive sell-off in global financial markets, after which it continued going higher. And now we're at a point where in September we have just had the first rate cut, 50 basis points, 0.5%, and you can see where we're at. So the question is going to be, what happens this time? Now, there's a few observations that you can make from this. Number one is that even though there's short-term pullbacks in markets, the nominal price of markets always goes higher. So if you hold for a long enough period of time and you don't get liquidated and you don't panic sell over a long enough time frame, you will still be profitable, at least in nominal terms. Keep in mind, the value of money is losing its value every single day, every week, every year. So even if you double your money, if it takes you 20 or 30 years to double that dollar value, you maybe actually have lost money in terms of purchasing power and real value. But that's another discussion that I don't want to get into. So the question is going to be, of course we want to sidestep these drops, right? You don't want to be fully invested, or even if it's with all your risk capital, why do you want to take a 50% drawdown in the short term and put yourself in a difficult position if this is going to happen? So of course, if you know that it's going to happen, it would be nice to just take profits, realize your gains, and then either just sit on the sidelines until everything crashes and buy back in, or maybe even if you know how to trade, you can short this and make a lot of money on the way down. And this is obviously a chart of the S&P 500, but this applies to the global financial markets. You can look at the Dow Jones, you can look at the NASDAQ, you can look at indices of other countries. Basically everything crashed similar ways during these time periods. If you want to win an iPhone 16, before I continue with the content, I just want to let you know that I've partnered with Blofin Exchange. We've decided to give away one of these, $1,500 in USDT. We're also giving 3 other people $100 in USDT. All you need to do is sign up to Blofin Exchange through my link. It is the link in the description down below. Use my link to sign up. It doesn't cost you anything extra. Deposit, trade there how you usually would. Trade futures, trade perps, trade Bitcoin, Ethereum, Solana, altcoins, whatever you want to do. And on the 8th of October, we're just going to be giving this away to random people who trade using my referral link. So that is very, very cool. $1,500, brand new iPhone 16, and also 3 people will just win $100 in USDT. It just gets dropped into your account. So if you want to trade, you trade anyway. Blofin, in my opinion, is a great exchange. Sign up through my link. It is down in the description below. And maybe you'll win an iPhone or a $100 prize. And I actually hope to be able to do more of these in future. The more you guys trade through my link, the bigger prizes I'll be able to give away. And hopefully that's just a win-win for everyone. So if you want to trade on Blofin, click the link in my description down below, sign up, deposit, and start trading there. Now the interesting thing is, of course, Bitcoin was only created in 2009. So Bitcoin wasn't around during these previous 2 crashes. We did see what happened to Bitcoin in March 2020. It sold off just as much as global financial markets. We also saw a big 50% drop in Bitcoin, and in altcoins we saw even more than that in a short period of time when it recovered. So if we are going to get a sell-off, we know that most likely the standard playbook that they're going to follow is markets crash, everything drops, everyone panics, and then they step in and they start printing a lot of money and everything pumps even higher. So that means that you can at least have some sort of idea if we get some sort of panic sell-off, or if things go down first, which isn't my main scenario right now, but let's just say we get a repeat of March 2020, everything sells off 50% first. At least you know, if you're within your risk capital during that sell-off, that is the best time during those lows to be able to allocate more risk capital to those crypto positions for a massive, massive run to the upside. Now, I do actually think that we are still going to continue higher, but keep this in mind because there can be a lag of 2 to 3 months, maybe 4 months after that rate cut. 3 to 4 months after the September rate cut would put us somewhere between December and January. So coming back to the Bitcoin chart, that would actually perfectly play out with a repeat of this previous cycle, which would then, if we continue the pump here, let's say we get the monthly close here above 63,000, it would be bullish. We see a massive pump in October, November, maybe even into December in a similar way like we did here. And then we peak somewhere, maybe in December, maybe in January, and we start a new bear market. That is completely a possibility. We start something like this, we peak, and down we go once again. So at this point in time, this is the main scenario I'm leaning towards. Obviously, it depends on how the monthly candle is going to close this month, but assuming that it closes above 63,000 this month, I would look for continuation, a big pump across everything, and then we have to start being careful towards December, maybe January, for potential top signals if it does pump like this, and then we might get a peak and a global market pullback crash. So basically, to sum this up, what does this all mean? If this scenario plays out in this way, we probably have 2 to 3 months, maybe a little bit more, of a big upside where there is huge potential money to be made. That means you need to be allocated now. You need to be looking at altcoin charts for good setups. Once it starts to pump, it can pump very, very quickly. Let me just quickly show you once again what happened in 2017. Maybe you've been around since then. If you're an OG in the crypto space, I still remember it. But in case you weren't around, look how quickly this market pumped. Okay, you can see over here in September of 2017, Bitcoin was trading at $3,600. Then by the middle of December, right, so not even 4 months later, it hit all-time highs there at $20,000 for the cycle peak. So I think we might actually be repeating 2017. We'll find out. So if we get a nice monthly close here, 63K, we might see everything just massively pump for the next 2 to 3 months, somewhere mid-December to mid-January for a complete peak. That means there's huge amounts of money to be made, but also keep that in mind. I will obviously continue to update here on the channel, so make sure you follow and subscribe. But somewhere between mid-December and mid-January could be a potential cycle peak. This cycle, if everything continues to pump into that date, keep that in mind. If things deviate, if things change, I will obviously make different videos.